Welcome to Marketminds Insights, the channel where we simplify stock market concepts to help you invest smarter. Subscribe for weekly finance and market insights.
Welcome to today's video on understanding dividends in the stock market. Whether you're a seasoned investor or just starting out, dividends can play a pivotal role in building your wealth. So, what exactly are dividends? Simply put, dividends are payments made by a corporation to its shareholders, usually derived from profits. They offer a tangible return on your investment, beyond just appreciating stock prices. Companies typically distribute dividends on a regular schedule, often quarterly, and they can be paid in cash or additional shares. Why do companies pay dividends, you ask? It's a way to reward shareholders for their trust and investment. It also signals a company's strong financial health and steady cash flow. When you're selecting stocks to invest in, those offering dividends might be particularly attractive because they provide a source of income in addition to any capital gains from selling the stock. Let's talk about dividend yield, a crucial concept for evaluating dividend-paying stocks. The dividend yield is calculated by taking annual dividends per share and dividing by the current stock price. This percentage can help you assess how much bang you're getting for your buck. For instance, if a company has a dividend yield of 3%, it means you earn $3 annually per $100 invested. Generally, mature and stable companies, like those in the utility or consumer staples sectors, tend to offer higher dividends. However, it's essential to be cautious. A high dividend yield might seem appealing, but could indicate that the stock price has fallen or that the company may not sustain those payouts. That's why it's crucial to analyze dividend history and the company's financial health. Additionally, during economic downturns, some companies may cut or suspend dividends to conserve cash. In conclusion, dividends can provide a steady income stream and are an essential component of a balanced portfolio. However, like any investment, it's crucial to conduct thorough research. Evaluating factors such as dividend yield, payout ratios, and company stability will help you make informed choices. Thanks for watching, and don't forget to like, subscribe, and hit the bell icon for more insightful content. Stay smart, stay invested.